Do you want to learn how to invest in multifamily units with none of your own money? Do you want 100% of the growth, 100% of the appreciation, 100% of the cash flow? Well, today we're going to learn how with the experts, Investor Mel and Dave. Hi, everyone. I'm Darren Mitchell. Welcome to Control and Compound. Joining me today, first of all, is Christina Wyatt, wealth coach at Control and Compound. Christina, how are you?
Hey, Darren, I'm doing great. I'm so excited for this episode. I met Mel and Dave at the multifamily conference a few weeks back and saw their presentation, and I'm just super excited to share this with our listeners. Before we get started, though, I do want to remind everybody that if you're listening on your favorite podcast platform, please subscribe and leave that 5-star review. If you're listening on YouTube, make sure you like, subscribe, and hit that bell button so you always know when new content's coming out. Don't forget to follow us on our socials at Control and Compound. And again, don't forget that new community, Infinite Banking for real estate investors and business owners. Excited to get that all in. Thanks, Darren.
All right, well done. Now let's introduce. So We've got Investor Mel and Dave, or Mel and Dave Dupuis. Mel and Dave, welcome to the show. How are you today?
Hey everyone. Thanks for having us on. Appreciate it.
So I think anyone that has a phone or a computer is aware of you guys. I know my feed blows up with your content, and I love it. I love just watching how you guys have grown your business and your rental units. But I want to kind of step back and kind of go back to the beginning. And you like most of us, you were born and around 3 or 4, you decided you wanted to be a real estate investor, or was it later in life? Like, what was the turning point for you? When did you decide really to get started in this real estate journey you guys are on?
Yeah, well, when I first met Dave, I had 2 rental properties. He had the one. So we knew that. So it came a little bit later. We were both working full-time jobs. Dave was a full-time firefighter. I used to work at our local college. And we knew that we could somehow create wealth with real estate. We didn't know how, but so we decided to go on this journey together. And at first we did what we thought was the most genius and wise thing to do, was work all the time to try to get that money for the down payment. But of course, after a while, we hit the roadblock and ran out of our own money, of course, and we couldn't continue to grow. And that's when we got into creative financing.
Very cool. So how long ago, like what you guys were, like in your 20s, in your 30s, when was it that you decided this is the path we're going to go? And how long before you left your 9-to-5 jobs, your T4s?
Well, we both quit our jobs in our 30s. So I guess we kind of started 20s, 30s. And then
I started 25, 26 roughly, yeah.
I'm a little older. We won't get into that.
No.
But yeah, and then, by the time we were both in our 30s, we were both able to quit our full-time job. So it didn't happen overnight, but it was pretty quick once we understood how to use creative financing. In 2017, we bought 12 properties in 12 months. That was 56 units, and they were solely owned, which is really nice because we keep the cash flow and the appreciation, the equity, and the decision making. It's only between the 2 of us. I don't have to make decisions with anybody else. And then the next year I was able to quit my full-time job, and they quit.
Yeah.
That's amazing. I know you say creative financing, but you're very well known for, OPM, other people's money. Like, you're able to do this with other people's money and no joint venture partners, right? You're doing this all on your own, not answering to anybody else. Can you give us some background there and tell us a little bit more about this creative financing that you do?
So yeah, just to clarify, there is nothing wrong with joint venture partners. I don't want to sound like I'm coming across that way. It's just we chose not to do so. Because again, we just didn't want to give up 50% of the ownership, the equity, the cash flow, the decision making, all of the above. But what we end up doing is, instead of having equity partners, so instead of having partners that basically would have 50% of that, we give them interest, right? So instead of equity, we retain 100%. Well, not us, our corporations or LLCs have 100% of the ownership, and then we just pay them an attractive interest rate. Again, as long as the deal makes sense and can support it. Now, that being said, the 3 that we absolutely love, our go-tos for other people's money, seller financing. Like, that's our favorite. That's our go-to. Having the seller do a win-win where they get to decide what they want to do with the asset. They get to help themselves capital gains. They get to make money, right? Interest off of your payments as well, while helping you get the deal. Using registered funds. This was a game changer. Once we understood how to start using other people's RSPs, TFSAs and liras, right? The other cool thing is, as Canadians, you can use your own to buy in the US as well, which is pretty cool. And then promissory notes. So when we say other people's money, we're typically talking about one of those three.
Okay, I love that. I just want to dig into a couple of those. So from an owner's perspective and owner financing, I know it happens all the time, but people hear about it and they go, "Well, really, like what's in it for the owner?" So can you just walk us through the tax advantages, and you don't have to give us numbers, but like what would a typical deal look like? How much the owner would keep on the deal, or basically front you the money for? Like what would a typical deal look like, and what's in it for the owner?
Yeah, what's in it? Why would they want to do that? I love that question because people need to understand it if they're going to want to do this. So they do it because it benefits them, mostly from a capital gain. So essentially, they get to defer when you sell, there's capital gains. There's no way around that. But as a seller, you get to defer your capital gains. So Dave and I, some of the properties that we've personally sold throughout the years, we're actually holding on for them. Owner financing, and we never even met these people. Why did we do it? Because it benefited us. We're getting interest. I don't even have the property anymore, and I'm still making money, and it helps me out from a tax perspective as well. And as far as the structure of the actual deal, it will differ. Overall, what I've found perhaps the easiest or the most frequent is when they come in second place. So that 20 or 25% down that you need doesn't have to be your money, OPM, other people's money, and they'll lend you that amount. But we've done it where they're in first place, and then we use, for example, a promissory note in second place, or we've also done them where it's 100% owner financed as well.
Excellent. And Dave, you mentioned in the States you can use, did you say your own RRSPs to finance your own property in the States?
It's a pretty cool thing. We've been showing the Action family. It's kind of through, without giving it all away too much, it's basically you invest your funds into a mutual fund, and then they on the back end give you the funds back. So their securities for your mutual fund, they give you the funds back. Well, they don't give it to you, but they give it to the closing lawyer or closing attorney or escrow company for you to be able to utilize towards the purchase of the asset. So it's pretty cool.
Very cool. So you mentioned the U.S., so you guys are investing in the U.S., you're investing in Canada. Is that it, or any other countries or any other places you're investing outside of Canada or the United States?
Yeah, we're in 5 countries now. So Canada, U.S., Costa Rica, Dominican Republic, and Mexico. And the cool thing is we're using the exact same strategies that we used in Canada and the U.S. So once you start doing it, that's the cool thing about it, is that you can use, I mean, there's certain small things that are different, of course, but overall, it's the same kind of negotiation, the same structure, the same exit strategy that we always refer to on how we're going to pay back that money. So everything is more or less the same. We're just doing it in different countries now.
That's super cool. I was talking to Darren earlier, and I had said I saw the Costa Rica one, and I was like, that is because we had talked about multifamily, but it's not just multifamily. It's, you use it for Airbnbs, you can use it for multifamily, duplexes, anything that you're working on. So the strategy kind of applies everywhere. I just wanted to ask a question about the exit strategy. So you set these up. When you start, are you teaching people to get to using these to kind of get to the end all exit strategy is what you're doing, or how does that kind of fit in?
Yeah, I mean, it has to be built in. So we use our cash flow matrix, for example. It's all numbers, and it lets us know whether or not we have our exit strategy. Essentially, that means how are we going to pay back that private money, whether it's owner finance or secured funds or promissory note. We as investors need to know how we're going to pay back that money with a refi, or it could be a sell of the property, but typically we like to refinance. But we need to know this before we borrow the money, of course. Mm-hmm. And the neat thing about it is that not only will you know as investors and be confident on it, now you can actually show people how you're going to pay them back as well. And well, most people won't lend to you unless they know that and feel confident that you can pay them back. So it makes it a win-win, makes it easier for people to want to lend you money as well.
And can you build in some flexibility in those promissory notes? Because I know a lot of, I've been a private lender, not a private borrower, and I know as a private lender, you're always nervous. Are you getting that money back? And what if there's delays? And does the person doing the deal have enough experience that if there's a delay and the money's not going to get back, that they have plan B and C? So what kind of flexibility do you guys build in for protection on that promissory note?
Yeah, and I'm glad you said that, Darren. And honestly, promissory notes are not for everyone as well. Like I'll have some, we were just talking to two lenders, but they last week, and just feeling out their trust level, their confidence in that, and what type of security they want. So out of the two, one of them was completely a no for promissory notes. And I just want your listeners to know that if someone does say no for promissory notes, like some people just won't be a yes. Like they need a mortgage, they need collateral, they need security, right? So it's okay to get no's from people for promissory notes, because basically, like Darren is saying, as a lender, you're saying, hey, where's my security? Where's my guarantee? Basically, I get this money back. And with a promissory note, it's not necessarily there. Your next steps would be litigation, right? There's no mortgage on the property, so there's no guarantee per se. That being said, there are ways of doing it where you could have the promissory note. You could have, for example, depending what's going on with the property, possibly a first or second charge mortgage done up, but not actually executed, right? So that if they do default, you've already signed off on everything, and it's a way of executing it on the back end. Again, it's not airtight, because who knows how many other mortgages they have on and things like that. But there are these things to help you navigate through it. But again, not everyone is yes to promissory notes. Some people want that first. Some people are only first mortgage security, right? They have to be in first. Some people will have a different appetite. They're okay with second. So showing people your exit strategy has been our best, right? And promissory notes, we've had to do higher interest with them for lack of that security. But yeah, it's not for everyone. I agree, Darren.
And that's the thing. That's the cool thing about it. It's not for everyone, but as we all have different, I guess, wants. And when we were investing, some people want that higher interest and feel more comfortable. Or maybe like some of it's pretty neat. Maybe at first they did not want to hold a promissory note for us, but they had properties and they were owner financed. They felt more secure because of the property, the asset. And then we paid them back. We always paid them on time. They were happy. And now it's like, hey, Mr. Seller, I just paid you back. Well, just so you know, in case you want to reinvest with us, we have this other property. We're looking for a promissory note. Now they know, like, and trust us, and we're able to transition into that. And they're happy because they feel secure. They got to know us. They know we know what we're doing, and they're getting even higher interest than when we had the owner on it. So there's different ways that you can do that as well. And Dave is bang on. You will get, and Darren, you're bang on as well. You will get some no's. In all aspects, and that's okay. That's just the reality of business. It doesn't mean it's bad. It's just it's not a good fit for everyone.
Thanks for listening so far. If you're watching on YouTube, make sure you like, subscribe, and hit that bell button so you always know when new content is coming out. If you're listening on your favorite podcast platform, please leave a 5-star rating and leave a review and subscribe. And if you are interested in learning more, please visit our website at controlandcompound.com to sign up for a free education session with one of our wealth coaches.
Yeah, I mean, infinite banking is not a fit for everybody. We get people that it's not a fit for them. We're like, great, move on. Because it's a wonderful fit for a lot of people. It's not a wonderful fit for every person. So you just got to find those people that it is a fit for.
Yeah, and the
Agreed.
education behind it. I love that matrix that you put together for other real estate investors, because having those numbers and having that exit strategy is going to make it make sense for an investor to want to get involved. And I feel like we're the same on the education side. It's so important, and you want to share that. I know that you guys and I'd heard about you guys had a life-changing event that happened to you that really changed your real estate journey into wanting to share and help other real estate investors. Would you mind sharing that story with our listeners?
Yeah, sure. We it was a highway crash in 2018. So we had already purchased a lot of properties. Things were going well, but we were not telling anyone how to do this. In fact, even my mom had asked me, how are you buying all those properties, 12 properties in 12 months? You went to lottery, Mel? I'm like, no, don't worry about it, Mom. It's all legal. But we were scared of sharing it, right? The scarcity wants to keep it to herself. But it was a highway crash. We were on our way to Real Estate Investing Summit in Toronto. We're backseat of the SUV, and a careless transport driver was swerving in between lanes. He hit a vehicle that hit us, and we instantly hit the guardrail, started rolling 4 times across the 3-lane highway, and we landed upside down. And I have 3 kids, and so it was extremely scary. I thought I'm dying, never going to see them again. But it's going 100 clicks around me, like we're dying. But we did survive, and it was a day that forever, it's one of our worst and best days in a sense, and worse because it was so scary. I still think about it sometimes, and feeling so helpless. And then, but it was one of our best because it completely changed everything. I was at the hospital and think about, us and our future. And we still decided that weekend to go to the conference, although we didn't have luggage with us anymore because it was all impounded. But and that weekend's when we decided to write our book. It became a #1 bestseller pretty much as soon as it was released. And we decided to help other people do this because there's definitely nothing special about Dave and I. We just took action and knowledge and learned from a lot of mistakes. And we thought, well, why are we not helping other people do this as well?
I love that abundance mindset instead of a scarcity. That's a huge shift. Now you mentioned the Action Family. So you guys have an Action Family mentoring program, and I'll be honest, I snooped around, read the testimonials and reviews, and they were phenomenal and fantastic. Can you tell us a little bit more about that, and what is the Action Family mentoring program?
Yeah, and thanks, Darren. I'm glad you did your due diligence. So you're stupid. It's training and coaching from us, and some of the stuff. Well, I think the thing that we're most proud of is with the Action Family mentoring program. You get us, right? Like you get your questions answered by us. We do deal analysis. We review all of your stuff, but everything comes directly through Mel and I. And I believe the reason why we see so many testimonials, and obviously I'm biased, but the reason we see so many good testimonials and good results is they're getting it directly from us, right? We're the ones of hundreds of units, the good, bad, the ugly, the yeses, the nos, the ups, the downs. So when we created the Action Family, it was imperative that we're going to be the ones teaching you, coaching you, mentoring you along the way, showing them through videos and documents what we do, through weekly lives, through unlimited questions groups. The networking is very, very powerful. Like we call it family because it is. It's a very powerful family group.
Well, we didn't have a name at first. It was just it was kind of Mel and Dave's mentoring group. And then we saw the results and the action and the support inside the community as well. And then it became the Action Family.
I love that. Fire, ready, aim is a big fan. I'm a big fan of, because you can have all the great ideas in the world, but unless you take action and someone's there holding you accountable to take that action, all the knowledge in the world that doesn't help you at all.
Agreed.
Yeah, and I watched a couple of the testimonials as well, and what I thought was neat when I was watching them from the stage is that people from every different background, right? Sometimes you're like, no, you got to be this certain person to be the right investor, but you really teach. Like, I saw a lot of newcomers to Canada, which I think it's really hard for newcomers to get into real estate and stuff like that, and it feels like you've got a different process, and the way that you sit down, you educate, and you make those networks and those connections, it feels like you can really help everybody with it, which I thought was really neat.
And that's the thing. Again, there's nothing special. It's a system that you follow. It's a process that you follow, and we're there to support and answer your questions. And that's the thing. There's single parents, there's couples, there's people with kids, there's a lot of students from different countries as well who are, just everything's new to them. But that's okay. Even if you don't know how to get started, that's what it's all about. Whether you have a few properties and you want to get to that next level, or you're just like, I know nothing about real estate investing and I just want to get started, then we can definitely help you in either way.
Well, I think you're special. I think it's the sharing of it is not special in that way. The sharing of it, though, I think is really what sets you apart, because I find when you see successful people sharing, it just, everyone grows along with that. But what I'm interested in is what I'm surprised at, it works across the board. So there's people doing, single family duplexes, fourplexes, you guys go up to, I think you get a 50 unit, you get a villa. It just seems this strategy you guys have sort of systematized can really help just about any real estate investor. I don't know if you get your mobile home park, did you? Or you still everything but a mobile home, or did you get that mobile home park yet?
Not yet, no. It's still on the list.
Still on the list. But why do you think, well, it works across the board. So where are your most of the Action Families coming from? What are they typically investing in, or is there a typical Action Family member?
What I'm seeing them in the beginning, right? They want to get their feet wet. There's smaller multifamily is typically what we're seeing, right? People like to look in their backyard, that comfort level, which we get. It took us a while to get out of our backyard as well. And once you kind of burst through, you see that, hey, investing where returns are best, or investing where it makes the most sense for us at this time in our portfolio. But yeah, typically is the smaller multifamily deals. And then we see people start tackling bigger deals after that. But like our perfect student mentee action taker, what we're looking for is, okay, people that are serious, they want to buy their first or next property in the next 3 to 4 months, the next 90 to 120 days. They're coachable, right? They understand that, hey, even if they have some knowledge, right? You don't know what you don't know. Let us help you and bring you up to speed with a lot of different things. And people that are going to implement, Darren, right? The ready, fire, aim, whatever that saying is, right? People that are, they might not know everything right off the hop, but that's the journey, and that's what we're there for. So people that are ready to jump off the fence and then take action.
Yeah, but I mean, you guys have, hundreds of deals under your belt that you've made mistakes, you've had success, and then you extend that to the group. And Christina and I always talk about the importance of joining a group, joining like-minded people, because now you have thousands and thousands of wins and losses, and you can shorten your learning curve from making those 30 or 40 mistakes to maybe making none or a few, and just shorten how fast you can get from A to B. So I love that of the group and the sharing.
No, and we still do. I mean, we're always going to learn. We still have 3 coaches, and I'm always going to have. I'm a lifelong learner. I know that I don't know what I don't know, and if there's a way that I can save from making costly mistakes just because I didn't know something, why would I not learn from somebody else as well?
Absolutely. So if somebody was ready to take that action step and wanted to learn more about your mentoring program, how would they learn more about your strategies? How would they reach out or contact you guys?
Yes, well, we have our website, Investor Mel Dave, but we are all over social media. We have YouTube channel as well, and Facebook and Instagram, and our username is always Investor Mel Dave. Pretty easy, Investor Mel Dave. So if you follow us there, you send us a DM, we can send you some, you'll be able to jump on a call with one of our team members, and we'll be able to have a conversation and make sure it's that we can really help you in the first place and discuss the next steps moving forward.
Love it. Anything else, Christina or Mel and Dave, before we wrap up?
You know what? I would just want to say to those listeners, if you've been wanting to do real estate for a long time and you just haven't yet, it's just that, go back and think about your why. Why do you want to do this? Why are you listening to this awesome podcast, with the two of you in the first place? There's something that brought you here in the first place, and your why is going to keep you driven, because there's ups and downs. It's a business like anything else. Dave and I, of course, we've had some ups and downs throughout our business and years as well. But what really kept us going was realizing what was our why and focusing on that. So that's what I would encourage the listeners. Identify your why and then go take action and make it happen.
I love it. Thanks for watching. Thanks for listening. Check out Investor Mel and Dave. Huge education focused, other people's money, all the real estate knowledge combined into one sort of mentoring program. Check them out. Thanks for watching. Thanks for listening. Thanks for listening to this podcast. If you're listening on YouTube, please like, subscribe, and hit that bell button. If you're listening on your favorite podcast platform, please leave us a 5-star review and subscribe. And if you want more information, check out our website, controllandcompound.com, and you can sign up for an education session with one of our wealth coaches.